So the next step is once you know that these may be something you want to follow, you're comfortable with the allocation amounts, then how do you buy the stocks? Well, to buy the stocks, you want to go to a site like, let me pull up my browser and I'll show you how to do it. It's pretty easy, um, but I want to make sure that you understand how to do it. And the thing is that, um, I'm going to show you some sites. There's not a right or wrong answer. Um, I don't have any particular feel one way or the other. In fact, I would almost recommend that, the more you get into it, start with one. So let's try, Robinhood.com. And these are also really easy to do on your phone, but um, the steps to follow to open a brokerage account is as easy as going into a gym and signing up for a new membership. Don't let it become a thing in your head that, it's finance and it has to be hard. It's not hard. The steps that are there from them to you, I can give you a generic overview as somebody who's opened a plethora of accounts from the time I was 21 until now. And it's real simple. And, it's like doing your taxes. So, and again, you do your taxes, you pay somebody to do it. You can do them yourself. It's not hard. Um, you go to the site. I'm going to give you more sites to choose from. You choose which one to go through. I know that some people dislike Robinhood. I don't have any reason to dislike Robinhood. In fact, I think it's probably one of the easiest ones to sign up. And if you use the app on your phone to do it, it's so simple and it's so fast. And all you have to do is just link it up to your brokerage account, and um, it goes. So I mean, you can see right here. I'm just, I can download Robinhood. It'll take a minute to download, and it'll walk me through the steps to fund an account. So if you want to do it on your browser, you can do it on your browser, but I wouldn't listen to the news that's negative about it. I know that, they got a rap and everything like that, but if you want me to break that down in a different video, I talk about it in class sometimes. I think they are a good broker to use for stuff like this, and anything negative about them as far as like the fills or order flow or payment per order, that's just normal stuff that occurs in discount brokers. And if you're, going to go with Robinhood, or you're going to go with Schwab, or you're going to go with Interactive Brokers Lite, or you're going to go with um, like Webull, they're all going to do about the same thing for you. They're going to charge you $0 per transaction. You're going to be quoted a bid price and an ask price, and the ask price is going to be, if the stock's $48.51, that's going to be about the price you get filled at. And anything that happens after that really shouldn't concern you. Whether they fill your order at a lower price and then turn around and sell that order to somebody else to get it filled really isn't any concern of yours or mine. So I wouldn't worry about it. And situations like what happened with GameStop, I mean, that's such a rare thing. And I think, the fact that they were relatively new, they didn't have the capital requirements to put up to um, cover all of the short interest on GameStop. I don't think there was a ploy there. I don't think it was meant to rip people off. I think it was a total anomaly. That stuff happens, and you're subjecting yourself to that when you're, trading like that. And um, it is what it is. So I hope to educate you about, when to buy and when to sell, and how to avoid, traps where a stock, really, if you don't understand something, you shouldn't be investing in it. So, if something looks really fancy and enticing, but you don't know what it is, um, try to stay away from it. So I'll try to introduce more levered topics like options and futures soon, and teach you about them. But I wouldn't be afraid of Robinhood to use. I don't think there's anything bad with Robinhood. I used to feel a lot like most people did, and by most people I mean just people that have brought up to me like, "Oh, I don't like Robinhood." Well, it's easy. You just download the app and you can link it to your account like Chase and type in your email address, and it's super simple and super straightforward. I think that, you shouldn't have any issue. And by you, I mean you sociology major working in communications, or personal trainer at the gym, or you stay at home mom, or you high school grad that didn't go to college, or you high school dropout that worked on cars. You can fill this stuff out. If you can fill out a Gmail account, if you have a bank account, if you have a bank account that's very remote, like a credit union, then you might want to consider, taking whatever money you want to invest and putting it in a larger name account like Chase Bank or Wells Fargo. And you don't want to sign up for their stuff, just tell them, I don't want this. I don't want a credit card. I don't want to get coached on investments. I don't want a mortgage. I don't want to do an auto loan. I just want to open a savings account. I just want to open a checking account. It's real easy. Once you have your money in a bank like that, you can easily open an account like Robinhood and fund your account. It's that easy. So, you know, if you're a novice, maybe this is a good place to start. Other one, similar is Webull. I think they're very good. I have accounts with Robinhood and Webull. I don't have a preference one way or the other, but my rule of thumb is that you probably want to have an account per strategy that you want to follow to keep your money separate. But, I watch the pros and a lot of them don't follow that rule. So, um, maybe you want to pick one. You don't like it, do another. You don't like it, do another till you find one that you like. And there's a lot of documentation. So just spend time with it, get into it, try to figure it out on your own. And I'm here for you. Obviously, like I'll help you if I can help you. If there's something that I missed that you'd like me to break down more, if I start to see a theme of it, I'll make a new video and I'll post it to try to answer your question. Right now, I'm trying to just batch record content that I've had on the back burner for a while, and helping people sign up for a brokerage account is one of them. So these are the accounts I'm familiar with that I know and that I use. I know there's other accounts out there, but if you're brand new and this is where you want to start here. Okay, let's try another one. How about Schwab? The reason I'm using Schwab is because they recently acquired Thinkorswim, and Thinkorswim is a very cool platform for charting. If you don't know what charting is, don't worry about it. You don't need to. If you know what charting is, then you know that Thinkorswim is like almost the de facto for charting. And I'm not going to get into charting in this video. I'm going to talk about that in another video. But Schwab acquired Thinkorswim. Thinkorswim actually was its own standalone platform. And the broker that I'm going to talk about next is the broker that actually created it. But they sold to TD Ameritrade, and then Schwab engulfed TD Ameritrade. So uh, again, there's no fees here. There's no fees on Webull. There's no fees on Robinhood. If you buy and sell a stock, you won't pay anything. There won't be a fee to manage the account. You also won't earn any interest on your account, as far as I know. If you want to get into stuff like retirement planning and IRAs, I can build that out for you too. This is for just stock buying. So if you want to have an account of stocks, you don't know what stocks to own, I can go through that also. Basics. I mean, you buy companies you like and buy where you spend money. It's pretty simple. If I go out to like, you know, Disney, I was in Orlando recently. I gave a talk at the Student Managed Investment Fund Consortium South, and every time I go, I'm just like, what's out? A lot of times it's like Ulta Beauty Supplies. I don't know why, but I've never been in there and I don't shop there, but I know it shows up a lot, and they probably have really good fundamentals. So think about it. What do you use to pay for stuff? You use MasterCard, you use Visa. So those are the real simple ways to buy. Or like you use Robinhood, buy Robinhood stock. So um, as far as retirement planning goes, I mean, you can put your money in the S&P 500, and the earlier you start, the better. I put some money in the S&P when I was 19, which was during the '08 recession, and I held it for a couple years. I didn't put much in. I put like 2 grand in, and I put half in when I was 19, and I split the other half up over the next year. But I bought at the trough, and I'm not going to get into charts. I'm not going to get into looking at things. But if these are terms you don't know about, I'll hope to explain them more in the day trader beginner course and intermediate courses so that you understand technicals better. As far as the famous investor portfolios go, you just need a place to buy them. You can't just open up a piece of paper and say buy stocks. It doesn't work that way. You need to have a special bank, which is known as a brokerage account. And that brokerage account is going to give you access to low cost stock buying and selling. I would not do it with your traditional bank. If they try to talk you into it, just don't, because they're going to charge you a whole bunch. If they want to do it over the phone, they're going to charge you even more. So do it with one of these so you don't pay a fee. And the right now the newsletter, it's free for 90 days as of right now. um, I have a few left that are free. I've been running it for a year um, without taking any money. I have a variety of people on there, from retail store owners to professional money managers to Forbes financial planners to entrepreneurs. And my goal is that you can beat the market net of fees and have the fees not play into your decision making. And I'd like to get it to reach as many people as possible. So um, I think you can work through these. I don't think that, I'm not tech savvy. I can't do it. I don't think so. If you want me to help you with it, I'm happy to do it, for a fee as a consulting call, and I'll walk you through how to do it for an hour. um, but even then, I don't think it's worth, my time and your time. So maybe I can find people that are savvy enough to do it, that it is worth their time and your time to do it. And as a one-off fee, maybe $150 for an hour to get you set up should get you to where you need to go. If you've got 100 grand to invest and you're gonna, push the button yourself to buy and sell, I'll walk you through how to do it and show you how to do it when I do it. But maybe I can get people here that can also do that for you. And you want to pay the fee, you pay the fee. But you'll want to have more money in the pot to cover the fee. And my goal is to not take money from you. It's so that I want to see you invest regularly and often and beat the market and be very happy that you made the decision. Because from what I saw with these portfolios, I started building them in 2013. I won a best paper award, and I revised it and I published 2 copies of it, and it got me through, some tough PhD classes, and was so innovative that my classmates, were beating down the door like, can I have your slide deck? I would like to know more about this. And I got it published again. And then I watched it, and when I wrote it in 2015 and when I published it in 2018, it beat the market between that period, and I was working on other things. And then I finished my dissertation in a different area. I graduated. I started to work at IU in Metro Chicago, and I saw it was still beating the market. And then I thought, I ought to start to track these in real time, because every time I present, people ask about them. They want to invest real money. And when I started to figure out how to track them in real time, which in the intermediate course for famous investors, I'll show you how to do it if that's where you're at and that's what you want to do. I had a CEO of a energy company, engineering company from Lafayette, Louisiana, call me and want to invest his own money. And that's what kind of spurred me to think about this more seriously. And I bounced it off one of my friends who's a Forbes financial planner. And he recommended to do it via newsletter since I'm not a registered representative. I interned with one and I worked part time, and I thought about going down that career path, and I decided that, there was such a gap between the rigorous engineering financial knowledge like programming in R and machine learning, and that was stuff that I wanted to learn and knew nothing of. And everything I've learned, I've gotten out of side conversations. I mean, the CanSlim system, I got it out of a book that was handed to me by my, um, I'm off on a tangent here. So hopefully I'll be able to answer some of this stuff, inside the course or build a community for you to bounce stuff off of. But yeah, Rich handed me a book and I learned it, and then I programmed it using a simple site, and I've continued to revise it and work on it and just mold it and mold it and mold it and mold it. And um, I've beaten the heck out of it. I've stress tested, I've tried to make it fall apart, see what works, see how it can hold up over the last month, 3 months, 5 months, 10 months, year, up to 10 years, 20 years. And I'm convinced it works, and I don't want to wait another 5 years and go, man, I wish I did. So this is what I'm going to do. I'm going to start to invest in it. I'm going to open it up so you can invest in it. And hopefully, the fees don't play into it. If you're concerned about deep sell-offs, I've got a couple of variations, such as adding intermediate term support, such as capital weighted volume, which I'll break down. And that's one of Buff Dormeyer's tools that I learned from him. But the other one is a recession indicator that I made, and I spent a lot of time on that, and I'll break that down in another video. But there's a lot of tools out there that can save you from market sell-offs. But even if you hold through the sell-offs, from what I've seen, these still beat the market, like during 2008, because of the way it rotates through the stocks based on their fundamentals. So it's constantly figuring out what the stocks are that you want to own based on fundamentals. And then it's, investing you in them, and the constant monthly rebalance and ranking the stocks is what does the trick. And I am going to dive into technical analysis. I'm going to look at, how you could try to maybe peel out the best 3 or 4 to own, and then to add on to that, to buy options on it. So there's a lot of opportunities here. I also want to take my dissertation, which was looking at more rigorous technical chart patterns, and put the passing stocks through that to see what stocks you might want to own or short or look at option strategies with. So as a bare bones basic, pick a screen that tracks the style of a famous investor, put the stocks in the brokerage platform. If you want to rebalance it every 6 months, you can. You don't have to rebalance it every month. You could rebalance it every 6 months, or you could just do it here and there. But if you don't want to have to think about it, you don't want to do a bunch of analyzation of financial statements, you don't want to do a bunch of math, just let the recommendations show up in your email and take them, or don't. I've got portfolios that I've tracked, that I watch, that, I buy the stocks as a one-off and I forget about them, and they still beat the market. It's like every time they run, they're giving you the best possible stocks, and it's a great look. So like, this is the CanSlim portfolio. You can see the dip, when the market sold off. It's got that same kind of V-shaped recovery. I'm not getting into technicals. I'll get into that in a different place. But, now it's up and up and up. And if you track it to the S&P, you can see it's well beating the market. And, um, over the last 6 months, it lags. Well, that's part of the game. The other thing is, I stopped updating this in February, so I haven't updated it through March, through April, through May, through June. So this is just looking at the last, go around. But, this 3 month lag, this 6 month lag, this will come back up over the last 6 months, and it's okay, that once in a while it lags. Um, the other thing I want to show you is, so for the beginner basics, it's just, you'll receive an email with the stocks that pass, and that's what you'll get. And what I'll do is I'll just update it for you each month, and then you just have to put them in your brokerage account. And so Schwab is the other recommended broker. I have a login for them. I don't think it's hard to log in, but I'd say, like, the easiest is Robinhood. It's so simple because it's just aimed at reaching so many people. And, whether that's a good thing or not, I think more people should have the ability to invest. But, some people that might not want to take the time to fill out all the forms with Schwab, they might only have the capacity to just come in here and say, here's my name, here's my email address, here's the password that I want to make. Oops, 10 characters, okay. Let's try this one. So hopefully you're still with me. I know I'm kind of ranting, but okay, what's my phone number? What's my address? This is my business address. What's my state? So they're going to send me a text. So this is going to take about 20 minutes to do it. I got my text. I'm going to put in the code. You can do this. Don't tell yourself that you can't do it. Got to put in my social, my date of birth, my citizenship. Is this going to show my whole social? Yeah. So I'm not going to put all this in there, but you can do this. I'm just showing you how easy it is. Webull, same thing. Sign up with your phone number. Okay, I'll put my phone number in there. Send me the code. Got my code. Getting a shop where people can get this in and, people sign them up, that'd be cool. But, right now it's like a online thing. So you have to put in some of the work on your own. I can show you how to do this stuff, but if I go through and make 20 accounts to follow 20 strategies, I'll record it and I'll post it. So yeah, now you want to pick your account type. You want to trade your own money without borrowing, cash account. And then that should be all you need. Schwab, same thing. I actually haven't opened an account with Schwab. I just transferred my account, but I don't use it, but I use the charting. Okay, so I'll get to the last two accounts and then I'll look at the stocks that are passing the screen and then we'll wrap this up. This has taken a lot longer than I wanted to, but you could see at the starting page, open an account. What do you want? You want a brokerage account, individual brokerage account, invest in stocks, ETFs, options. If you think that you might want to eventually down the road do options and futures, then get a Schwab account or get an Interactive Brokers account or get a Tasty Trade account. So these are all just going to take you through the same basic questions. Let's come back to this. All right, Tasty Trade. They were an educational platform for options, and then they had a brokerage account called Tasty Works, which is in the West Loop in Chicago. And if you've heard of like the New York Stock Exchange or the Chicago Mercantile Exchange, Tasty has their own exchange in the West Loop. I actually tried to get a group of students to go and tour it, but they didn't really do tours. But now they moved their account from Tasty Works to Tasty Trade. If you're in Chicago ever, you go to the Cubs Stadium, they've got a big advertisement right there. If you think you want to do options and futures, then maybe you want to go here because I can teach you a lot about it. But you also can start at Robinhood and pick one bank, go to Chase Bank, put in the money that you think you want to invest. Don't worry about earning a return on it. Link your Robinhood account to it. You think you want to maybe do options and futures, open up another account, link that account to it. And then you can pass money back and forth, go from the brokerage account to your bank to the other brokerage account. So same thing, these are really easy to set up. It's not hard. Interactive Brokers. So, Interactive Brokers, this is the one that I like the most. I think they all have their benefits and uses, but the reason I like IBKR is that they pay like 5% on your idle cash. So my money at Chase earns nothing. My money in IBKR earns 5%. It's pretty good. And the fees are low. IBKR Lite is like the rest of them. Tasty Trade, I think stocks are free, options are minimal. Interactive Brokers stocks, they do charge, but it's so small you'd never even know it. It's like 0.005 cents per share. It's nothing. So these are the brokerage accounts that I would look into, pick one, and that's how you invest. Oh, we were going to look at the screen. So here's the screen. And so you can see following it back in 2000, how it's doing, how it's doing. And if you snip out any one point in time, then, you might lag the market at some point, but you can see how it does compared to the benchmark here and the excess returns. So it's, beating, 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 losing, losing, beating, beating by a good amount, beating, 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 losing. That's over the last year. This is the same screen we just looked at. So from July until now, let's see, last July it lost 3%, then it gained 1%, then it gained 1 1/3, then it gained 5, then it gained 12.5, then it gained 9.5, then it lost 2.6, then it lost 5, then it gained 140, 850, 2.06, 3.5, 3.25 so far. This just updated in June 14th, and it'll re-update in another couple weeks. So 37.4% is what it's done over the last year. And so what I did was I opened up an account to track it last year in July, and that's up 33.87%. So there you go. It's tracking it very closely, and I just manually put the positions in each month, you know. So, and I stopped investing in February, so it's very flexible, if you get the newsletter and you wait a couple days or you wait a week, it's fine. The way I have it set up, each 4 weeks I send out a different newsletter, but they all update together every month. So, every 4 weeks they all update, and that's just monthly rebalancing. But if you want to, um, rebuild them on your own, which I'll show you how to do in the intermediate course, then you can get the picks, whenever you want them, or you can change the rebalancing frequency and you can play around with it more. The way I have them set up, I think they're good. They might not be perfect. There's probably other ways to do it, other stuff to put in there. So you could start to teach yourself it. And I can obviously cut down on the learning curve a lot. I've spent a lot of time on here. A step beyond that, in the advanced course, I want to get into actual programming. So like coming up with your own data feed, putting in the rules. I'm leaning more towards Bloomberg right now, and like Python inside of Bloomberg as the data feed, but then you have the most control. So yeah, and I've done that with every single one of them. So it's not just O'Neill. I've got, CanSlim on the S&P 500. So the way I do it is you get two newsletters. You get one for all available stocks, which is like 7,000 US stocks, but I limit it down, so there's uh, no stocks below $1, um, no stocks below like 150 million market cap. And then I go through each one and make sure that there's not more than like 10 to 15% of the stocks in that low market cap range of 150 million to 350 million, but I absolutely get rid of the ones that are low market cap. So here's the S&P 500 version. Um, and again, I stopped rebalancing it a couple months ago when I saw the market sell off. So each one does really well. And so I'll send you a newsletter with the stocks that pass, and I'll send you the stocks that were sold if you had started, prior to that month, and the stocks that were bought to replace it. And then your goal is that, you want to follow the allocation that's recommended by the newsletter in your account. And the accounts that I recommend are Robinhood, Webull. I don't have any relationship with them. It's just the accounts that I've learned over the last 15 years and the ones that I've gravitated towards. There's other accounts out there. I know, like the Python guys, they like Apollo. Um, and I don't have an account with them, so I actually don't even know like what they are, but I think you can do a lot of stuff with them. So there you go. If you want to do it with Apollo, do it with Apollo. I think I've covered the basics here, and it might take you a half hour up to an hour. If you're not tech savvy, maybe a day. It shouldn't take you more than a day and a half. You want to call a friend, you want to call your broker, have them help you out. If you don't have a good enough relationship with your broker, that they'll help you out with something like this, then, I can help you with whatever they're doing for sure. I mean, you want to allocate into stocks and bonds. You want to look at deep value with stocks. You want to look at fundamental value, discounted cash flow analysis, sector rotation strategies, advanced market timing, technical analysis, option strategies, covered call strategies, futures strategies. I'm going to cover all of that on my site. And I'm starting with the basics, which is the famous investor portfolios. So, I think that's more than enough for now. And I'm just going to put this up on YouTube, let you take a look at it, let you gravitate towards it. If you have questions, reach out. I'll probably just scan them to look for themes. If anything really jumps out, I'll get back. But I'll try to make some communities inside the members area for you to collaborate with other people. And then the higher tier courses will have more premium consulting where I can get with you more one-on-one and answer your questions. And hopefully the fee more than pays for itself. Thanks.